Good turnaround Tuesday, everybody. How's everyone doing today? Thought I'd let everyone see my face. I don't have coronavirus. I have grayitis. My hair turned gray from the virus. Everyone doing okay? Looks like California is the epicenter here in the US. Okay, just want to let everyone know that I'm not a hologram like the rest of the crew. Stop this. Okay, so S&Ps have recovered all the way back to the wedge throwover line. See, weekly. Here's a throwover line, and also had a speed line coming in. They met around 3,100, between 30.85 and 3,100. So far, getting rejected. One of the most interesting things to me is with this recovery of risk. And Blake was spot on that the euro there was going to be at least a short squeeze in euro when we had risk off. But look at this candle right here in the S&Ps, and then look at this candle in the dollar. I think the most telling thing was if markets really had stabilized, the dollar wasn't believing it, right? Oh, good morning, Ingmar. Shahab, Monica. So I think that is a message. Okay, kind of confirms this high, and even if we get a continuation move in the S&Ps, which may or may not happen, I mean, it doesn't look great with what it's doing right here. I think Ben talked about 30.88 yesterday in our webinar yesterday, some type of ABCD, pretty close, but 31. The next major resistance to me, major, is 32. Once we took out 32, it never looked back. This high checked it at 31.82, and I have fib 61.8 back at 31.89. So we'll see what happens if this was enough and we're going to just start heading down. And we could also head down and not make new lows right away. We could have an A, a B, and then a C. So I'm not jumping all over shorts right here anyway. I mean, scalp things at major areas, but I'm not sure we're just going to retest this low right away. Like I'm saying, there could be some more time, another week or so. And, I don't think you could get constructive this market until we close back above 3,200. I think that was also Ben's line in the sand, bull bear line at 3,200. Looking at the yen, no reason to buy it. Although we did have a bit of a correction in TLT yesterday. I don't think we're going to leave an island top, but decent little correction starting here. See the candle, daily candle. I can't call this a top because of the divergence, but the RSI over, at 80. So if this hasn't topped, this hasn't bottomed, I'll tell you what I'm laying for in US dollar yen. And when you think about it with what rates have done here, okay, so here's the 10-year, right? We've had this, I mean, massive, major washout in rates. And I know we're all saying that maybe the yen has, disconnected. And when you look at it, though, look at this, pretty long term. And it does look like it here. But if you go out to say the daily, and then look at the weekly, look at the daily on the 10-year. Okay. Yeah. This has been much weaker. And then if you go the weekly, you look at that, and then you look at the yen. Look how far off the lows we are, major lows in the end. But this kind of yield that we've had, this move in yields, why aren't we already under 104? So I looked at this, and I didn't see it till after the fact, but I'll show it now. That's something, how sometimes you see things after the fact. You know, we really never broke out of this, but when you think about where yields are and where the yen is, it's pretty respectable, don't you think? The yen really hasn't, you would have thought the yen by now would already be trading down there at 105 or so. I mean, look at the 2 weeklies, monthlies, I mean. So you've had this big breakdown. So the point being, bearishness is going to build, and it is building in US dollar yen, but I'm going to be pretty interested down here at 78.6, 106.13. It's still 150, 160 pips away. But down there, I think I'm going to give it a stab in the yen, and maybe that's when you have a bond top, and maybe that's when you have the end of a reaction in silver, which really the reaction's weak. Give me 1750 to 1780. I'm all over it. Gold's still looking better. I don't know. Are we going to get a 3 by the time the yen gets down there, or a failing rally in gold? So those are some of my views. And that's just one guy with views. You really need to put this in your arsenal. You need the views of Blake and Greg, Estelle, Steve, Paulie, Joe, Amanda in the chat room, Andre. Okay, you need to have this stuff to go to when you're feeling some type of, you know, it sounds good, but I wonder what the wave count is on it, or I wonder what the harmonic count of it is on the euro. So, you know, right there, I could see what Andre's thinking, right? Andre's looking for, had called this turn. You know, I wonder where Greg is at on the euro, you know. He showed this, he's looking for about 113. So it's in a regular ABC. So B could take out the A low. I like these because they shake out everybody. Everyone thinks this is a new wave down, but he's thinking up here, we're not that far away. So it's really an advantage for me because, you know, I'm not an elitician. I really don't know harmonics. You know, I do a lot with RSI, but I respect everyone's work here at ForexAnalytix. And when I have an idea, you know, this is my sounding board. So take advantage of it. You know, you want to know what Blake's thinking. Most of his stuff is basic technical, and just because you have the word basic in there doesn't mean it's easy to master it. Okay, it's things that have been working for hundreds of years. Okay, so you know, basic technical analysis takes a long time to master, you know, just like any other methodology. And look, Blake showed this trend line, perhaps see. I actually scalped euro pound, and knowing that this channel lines here tells me, you know, the euro could pull back. I'd like it around 950, and EG could pull back. But I'm telling you guys, that is definitely worth 10 pips a month to have all of this at your disposal. You don't have to do all the work. Plus, I can be away and get push alerts and be able to do something and not be chained to my trading platform or station. You're mobile with our stuff, so that's another huge advantage. So wondering what Blake is thinking in here today. And Blake, you think that line I just showed on Euro, the resistance line on your work on basic technical,
Can
it's
you,
going to have some
I'm sorry,
longevity?
Dale, I was actually had stepped away for just a moment.
Oh,
Can you show me the line?
oh, it was, I was going through the, here you go.
Oh, it's big. Yeah. Huge,
Okay. Yeah.
huge.
So I mean, when I saw that, I took a shot at Euro pound and it worked for about 40 pips. So,
Oh,
uh,
nice.
yeah. So, I'm wondering what you're thinking here.
I was reading a little bit earlier. This one of those bank tech gurus was talking about this. He called it a channel. Here, let me go ahead and take over real
Okay.
quick.
All right, bro.
Um, Make sure I got the right screen. I should do a video just to show you guys what I have on my screen sometime. On my all my screens, I mean. So this big tech guru was saying that this is a channel, and I was let me clone that really quick. That was really like a big channel support, which or resistance, excuse me, which it is, which he believes it's going to take some of the spin off of the Euro rally near term. He it was saying that he thinks that it's while it's below this level, that it's a big deal. And just so you guys know, this is bank research that came out overnight. ForexAnalytix, you had that analysis yesterday. If you see the euro dollar continues to squeeze higher, as we are now at the 88% retracement and 127% confluence. This is, earlier in the session, the 111.80 should offer near-term resistance as the 4-hour RSI is divergent. And, as you got to see with the 4-hour charts, we hit that resistance, and we knew that it was really big up here. So now, what do you do with the euro at this point? I mean, my 2 cents is while we're above 111, it's too early to be bearish, and frankly, if stocks continue to weaken here, the risk of a break of 112 is quite high. But what I'm doing with the euro, and just so you guys know, right at this moment in time, I'm going to start thinking about being bearish below here, and I'm bullish above here. And so while we're stuck in this range, I don't know if there's a whole lot to do at this moment. Just looking at the pair. Now let's talk about the price action overnight. So the S&P, we were rallying, and think about yesterday, we were rallying pretty aggressively. G7 finance ministers were meeting this morning. They met. Everybody was thinking, oh man, we're going to get this surprise rate cut. We didn't. Like some coordinated rate cut effort. We didn't. So the S&Ps have naturally sold off a little bit from the highs. Now, you're probably thinking right now, this would be my guess, you're probably thinking right now, hey, if we rallied this full distance based on the S&P, or based on the finance minister is going to deliver us some big rate cut, coordinated effort, we should be heading lower now. Yes and no. Yes, it makes sense that we've pulled back a little bit, but I don't necessarily agree that we're going to completely reverse here. Not yet. What we've got now from the statement from the G7 finance ministers is we basically got a statement that says we stand ready. That doesn't mean that they're acting right now, but they stand ready, and therefore, if things progressively get worse, you can expect action. So what does that do for us as traders? It really tells us there is actually a backstop. If I had to, put it on a chart, there's a backstop somewhere down here, right? And if you think about what the stock market's done, my 2 cents is you got a lot of people that were probably buying that are like, you know what, I'm going to hang on right now because there's really no reason for me to sell if I know that if we drop much further or things progressively get worse from the global economy standpoint, I know that the Fed's got my back, the ECB's got my back, the RBA's got my back. They showed us last night, so I don't know. I would venture to guess, and this is, just me thinking out loud right now, we are going to be in this range for a while. See where this is resistance right now, but this is probably what we're going to be dealing with. We're not going to get much of a sell-off, and we are going to be dealing in some sort of range environment near term. Hell, we could even break out. Now, here's something else that I want to state really quick. Obviously I'm on all day conference call with my office in Greenwich, Connecticut. Some of the smartest guys that you're ever going to meet, that I deal with in that office. We were all talking about, the day's not over yet. And there is nothing right now that doesn't say that we could get some sort of action from the Fed this morning. We could still get a surprise quarter basis point cut this morning, and they could deliver that pre-market. So this day's not over. If you think that, the G7 communique because Mnuchin was heading that, and all we're going to get is what we got is this communique, that's not necessarily the case. So don't get too comfortable if you're like, oh man, I'm going to short stocks here just because we're not getting any Fed cut or anything like that. We're not getting a surprise cut. Don't be so sure. I'm not saying that that they're going to, but I think it's too early to make that call. Remember, Donald Trump and his administration is very sensitive to equity market prices, and he's a pretty influential guy. I know Fed Chairman Powell says that the Fed is independent, yada yada yada, but that doesn't mean that there isn't some sort of influence. Look, if you were the Federal Reserve Chairman and you were like, I'm going to hold my own here, but if things are weakening, you see the data is pretty bad, and you got President Trump basically barking at you all the time saying, why don't you cut rates? Why don't you cut rates? They could very easily say, you know what, a quarter basis point might be good in this scenario, as long as we can continue to reserve what we've got left for any other shock if it continues to get worse from here.
Hey Blake, the takeaway from me yesterday, I want your impressions, was how you accurately called the dollar sell-off with risk. I was surprised that the dollar didn't recover at all with risk coming back on. What are your thoughts about that?
Thank you. And look, I was extremely early in the call, but it wasn't a tactical, we got to buy the euro because the stock market's selling off. It was a, look, if the stock market ever sells off, the euro is going to rally, and that's what we got. So thank you for acknowledging that. Now, it was very interesting. Euro New Zealand's coming down, which is going to signal to us that, and I was short this last night, by the way. I shorted this at 78, and then after the RBA, I closed it at 59. I was actually at my son's soccer practice, and this right here, if we do start reversing, is going to be a signal that stocks are going to continue to recover. Anyway, it was a little concerning that the euro didn't sell off when stocks were rallying, but a lot of that could have been to the euro yen's benefit. I mean, the euro yen was rallying there too, and so that might have been some of it. But you can see the euro is starting to weaken, and we're getting down towards that breakdown area. So you got to be careful with euro longs if you got them. I'm actually more in the camp right now that stocks are going to continue to recover a little bit. And I think the euro is going to trade down here, something like this. I'm not short, just so you guys know. I'm not trading it. I'm carefully watching it, because way I'd trade the euro on a breakdown like this is you wait for the breakdown, then you wait for the retest, and then this is the area that I'm more interested in trading right here, right there. This is the area that I have more of a, you know, that's the place where I'd be, really trying to trade this thing. So, but the euro looks like it's going to at least give us a pullback from current levels. I do believe it's overbought, technically, in, on a swing basis. Excuse me. Sorry. But I do think that, buying dips, probably maybe the 110.25. That's probably a better place to look for it. But yeah, you can see stocks are recovering here, and so therefore, if stocks continue to recover, we'll probably see commodity currencies continue to recover. What was really interesting is the RBA cut last night. And Dale, did you see what the Aussie did last night?
No, I wasn't paying attention.
It ripped your socks off. So, the question that you may be asking is, well, why if the RBA cut, you can see right here.
Yeah.
Why if the RBA cut, or I'm sorry, they cut a quarter basis point. If they cut a quarter, why did the Aussie rally? Because this is I'm sorry, I said 50. I was thinking Fed in my head, and not the RBA. The Aussie rallied because twofold. The RBA stands ready to act. They didn't cut as much as they could have, and so the Aussie is recovering. Now, I do think that the Aussie specifically is going to be a sell up here. That's if we can get it. So if stocks continue to rally back, as you see them right now, if they continue to rally back and these commodity currencies continue to stay bid, I would be looking for the Aussie to rally towards 66.50 or so, and that's going to be like the level that I'm looking to be on the short side of the Aussie if we can get there. I know a lot of you might say, "Oh, Blake's bearish the Aussie. I'm going to just start selling now." Well, this right here is literally 100 pips away, or maybe like 90 pips away. So I'd be looking for a much broader recovery in the Aussie to be a seller into, especially after the 161% extension. This low was actually posted right after the fix, the end of month fix on Friday. So just think about that. All right. So, a lot of activity today, a lot of volatility still. I really do believe that we are going to be in some sort of near-term consolidation. Whether the consolidation is this broad, whether it's maybe right here, I think that we've got to digest some of these moves. This has been a really big move. It's a big move lower, nice recovery. Now we're probably going to consolidate, and it might be like this, somewhere like that. Now we're probably just going to consolidate and wait for the reason for us to continue to sell or to be long. And I think what we're going to find out is the coronavirus will continue to make its way around the globe. And because it's going to make its way around the globe, to what extent is going to really drive, how equities respond from this point. I think everybody's already expecting the numbers to worsen, to worsen moving forward. But how worse do they become? Do we start to see a pandemic type of situation? Which, look, we're dealing with a virus, right? We're dealing with a virus. We're dealing with a virus that mutates. If I'm not mistaken, influenza, and I'm not a medical expert by any stretch of the means, but the reason why the flu is such a pain in the rear end for all of us is that it's constantly mutating every
All
season.
the strains, yeah.
Yeah, there's a bunch of strains. So I believe that the coronavirus,
Correct.
the type of, you know,
Correct, and that's why the flu vaccine is different every year, Blake. They have
right.
to
And so,
adapt for
the
it.
coronavirus is going to mutate, I'm assuming. You know,
Even Corona beer has a mutation of Corona
it does.
Light.
You know, after 6 Corona beers, it definitely mutates for me. Tastes
They have
much
a
better.
light too for the uppies. Don't they have Corona Light?
So anyway, guys. So look, I think we have to be careful here. I don't think this is like the time where you want to be super aggressive, long or short. I think if you made some good money the last week and a half because of the volatility, and you know, predominantly for me, I've done really well being on both sides of the market the last 2 weeks. I've traded both sides. I've been shorting the dollar yen all morning. I'm not short it right now as I'm speaking, but I was short the dollar yen all morning, in and out, in and out, in and out. Now I'll probably play the long side as we dip down towards 107.50, and I'll just be buying dips, scalping in and out for 8 to 10 pips, doing that both directions, but just realize that volatility is probably going to tighten a little bit. So we're not going to see as explosive of moves, if you ask me. Now, I hope I'm wrong. I hope this volatility continues to whip around at 100 pip, 120 pip ATRs for the euro dollar every day. But I want to be optimistic, but I just don't think that that's realistic at this point. So anyway, I'm going to pass it over to my colleagues, Steve, Stelios, Dale. I hear Steve in the background. Stelios, I think, is back today. How you doing, guys?
Good morning.
Good morning.
Good morning. And Dale, I know, is here because we've been chatting all morning. So what's happening? What's the news with this G7 communique that we got? What are your feelings there?
Well, they're going to start printing vaccines, aren't they? It's great news.
They are. I mean, apparently that's what they do. They're good at it.
Oh, you know, we actually had a member of the Riksbank. Let me find her name. Bremen, Anna Bremen, I think is her name. And she said that coronavirus isn't something at the moment that we can address with easier monetary policy. Finally, somebody stating the obvious.
Yes, Scandinavians seem to be, a little bit smarter than the rest of them.
Than your average ECB member?
Yeah. Yeah, like, oh, let me guess. Can we actually address a health issue that is disrupting supply by stimulating demand? No.
Wow. Do we not have any data?
Nope.
Oh, we don't have any data today. This is Data Flash, guys. By the way, this does come with your ForexAnalytix subscription. Releases data, real time, pretty damn quick, almost as fast as my Bloomberg system does. So it's pretty cool to have as part of your your package with ForexAnalytix. Speaking of which, if you guys haven't tried out ForexAnalytix, make sure you do so. I know I always say it, but it's $1. You try it for 10 days, give it a whirl, download the mobile app, get the notifications, jump in the chat rooms, come say hi to us. I'm literally in the chat room. I mean, heck, I was even in on Sunday night this week. So, I mean, I probably spent at least 12 hours a day in that chat room, and it's right here. I'm already logged in, but you just click on it to get here. But I'm going to pass it over to you guys. I hope you have
Good
a
luck
great
today,
day.
man.
And thank you, Dale. Appreciate you all the time. And Steve, Stelios, I don't appreciate you guys enough. So
we know.
All right, guys. Have a good one.
See you later,
Blake.
Oh, by the way, if you guys don't know this, I do broadcast the Daily Roundup webinar in 4 hours. So catch me there. Okay?
Thank you, Blake.
Thanks,
Thank
guys.
you, Blake. Bye-bye.
Right. I mean, I know we're joking when we say that, actually, no, half joking, that, monetary policy can't fix, can't create cures or vaccines. But obviously, when the time is right, easier monetary policy will bring results, because I still think this virus outbreak will continue to disrupt the supply side quite a lot. We've already had 1 month where China is effectively closed or, close to. So the time will come for interest rate cuts, I think. But, if the Fed cut 50 or 75 before the first half of this year, they're just wasting their ammo, I think, at the moment. But they're going to do what they're going to do. But yeah, it's an interesting interesting discussion which I've had with many
central
people.
banks are a hammer, and they're trying to they're trying to find nails everywhere. So that's what they have, and they're hoping that every single problem is a nail, so they can hammer it down.
Yeah.
They'd probably be better off saving it for the demand fall off, the demand instead of the supply chain disruption, people pulling in their horns. It might help in that situation. But I even heard an example, guys. I mean, just because the Fed lowers rates and there's all kinds of news of contagion, does that make you want to go to the movies and sit in there with people coughing and sneezing?
Obviously not.
Yeah, so
or will it change your plans to go for vacations, for example, in Italy, let's say, in one of the cities that is currently stricken with a lot of confirmed cases of coronavirus? The average person wouldn't do that. No. So no matter what the Fed does, and irrespective of if interest rates are 1.5%, 1%, 0.5%, or 0.
Yeah, I have a trip booked to Italy in late May. I think it's going to be cancelled. It's not cancelled yet, but I think it's going to be anyway.
You will definitely be able to renegotiate prices.
Yeah, maybe. Yeah.
Free upgrade to the suite,
Friend here saying check in Expedia. There are great offers in Milan. Yeah, I'm sure there are.
Yeah.
So what else did we have? Okay, Blake talked about the RBA cut. I think there's a lot expected from central banks now, starting with the Fed, and people were talking that they were going to cut last weekend, or maybe this morning. Usual stuff. So there's a lot of expectation.
And I've seen a lot of calls like cut 50 base points, cut 75. Yeah.
Well, I don't agree. Personally, don't agree with these, with these rate cuts. At least not now, because they're not really changing anything apart from sentiment. Sentiment obviously will change, but practical terms, nothing is going to change. So let's see what happens. We'll have the FOMC on the 18th, I think. So if they wait until then, or they give us an inter-meeting cut, I don't think they will. But they're going to move on the day of the meeting. But the market is pricing 50. So there you go.
Yeah, that's going to be, in my opinion, an excellent buy the rumor, sell the fact event, if that's the case. So, in my opinion, the more the markets can, rebound in expectations of monetary easing, the better the shorting opportunity. Anyhow, if this proves to be a bear market rally, of course, it's not officially bear market yet, but every bear market starts by being less than a 20% move lower before it can actually cross the threshold of 20%, and then you acknowledge in retrospect that that was the beginning of a bear market. Keep in mind that very, very frequently bear market rallies are very vicious, so they can be very sharp. So personally, I'm not really impressed by the upside momentum. I've already started shorting the S&P. I started yesterday actually at 3,080, and I'm more than willing to just 1/4 of a position, and I'm more than willing to keep adding, as we move higher. I don't think that this rally can surpass like 3250 or so. So I'm
okay. That's your bull bear line, 2.5.
I'd have to say that I don't want to see it above like 3230 to be exact.
Yeah. 32.
3260 is probably my, not exactly my line in the sand, but no, I'm more than fib retracements in such cases. I'm watching like support resistance areas. I consider them more important because we know that these are demand supply zones, so there is open interest in these areas, and the market is going to frequently defend them. So I feel quite comfortable just getting in slowly in a short position, because I believe that even if this is a corrective move lower, one leg down is not going to cut it. So I think there's going to be at least a second, and of course if this proves to be like the bearish reversal, then we're going to be talking about a lot more legs to the downside. So I feel very confident shorting the rebound. I'm going to do it slowly. I want to have a nice cost average, and if it works, it did. If it doesn't work, it didn't. But I know that I've set a plan. I have the right criteria. I'm going to have a healthy risk reward ratio, and that's all you can hope for.
Right.
Yeah.
Yeah, the art of it is, is it 30.80 or is it 32.60? And I know, because I do it too, Steve, that if I'm probing at 30.80 and a week later we're 32, I always, even though I go, it's part of my plan, don't you say to yourself, man, I wish I would have waited for 32 to start?
No, because for every such a thought, there will always be the case that the market reverses lower and you have no position.
Yeah.
Because you were waiting, for an ideal level, which the market never hit.
Yeah. Yeah. I mean, this could be it at 31. You're right.
Yeah, it could be. I mean, my second entry for another quarter of a position, I wrote that yesterday in the chat room, is at 31.25. As you see, it's a nice confluence of resistances. Let me zoom into the chart.
Yeah, go ahead.
So it's a nice confluence of resistances.
Also, Sebastian, I see you're here, and thanks for hanging out with us. And the interview will start in about 20 minutes or so.
So
okay,
31.25, a 50% fib, horizontal support resistance area. Also getting quite close to this broken ascending trend line support, which very likely will act as resistance. And then I have another quarter waiting at 31.60, which is also an important area. So for the time being, I have two more market orders at 31.25, 31.60. I have no idea if they're going to get hit, but as I wrote yesterday in the chat room, I'm willing to take this to a full position, regardless of if this has to happen on the way up or on the way down. You know what I mean? So that's basically my plan. Coach,
Nice.
yeah, I see you're going. Okay. Yeah. I just saw it. Stelio, what else did we have?
A few little things, nothing major. Just in terms of data, where the Swiss GDP came in at 0.3% quarter on quarter. Now remember, this is for Q4. Mm-hmm. What we really want to see is Q1 this year, how things are developing. And UK construction PMI expected at 48.8, came in at 52.6. So a big beat. Even though we had this beat, the pound is struggling to rally, because once again, it's gone back to being driven by the Brexit negotiations and what's going to happen. And as we've said before, it seems that they're on very different grounds at the moment, the Europeans and the British, all sorts of things from fishing to, trade in general.
Yeah, no surprise there. And another factor, though, that is keeping the pound under pressure is definitely euro pound, because we know that euro pound is like the fourth most liquid FX pair, and due to this squeeze higher in the euro USD, we've had euro pound exploding higher, which doesn't help the pound recover against the dollar. So that's another fact. So there's also this technical plus slash flow factor that is keeping the pound under pressure. Now that the euro has also found resistance here, and I said it actually yesterday on the webinar, listen, I think that if we squeeze out of this confluence of resistances, we're going to go a lot higher. But as a short-term trade, it looks like it's a nice attempt here to try to be short for a pullback, and that's what we drew yesterday. That perhaps a pullback towards 110 is going to be expected and probably a decent opportunity to then try to be long for another move higher, in which you should expect this channel to actually break to the upside. So now that the euro has actually found resistance there, and euro pound seems to be stabilizing, the pound might hold here for a little bit, but the breakout area in euro pound, which was at 86 cents, I think that if retested as support, might lead to another leg higher, in which case I don't expect pound to continue holding up here. It might it might make another attempt to move lower. Anyhow, euro seems to be a better buying opportunity, at least in the short to medium term, than the pound. As you said, there are a lot of uncertainties around there, and that is obviously keeping some of the speculators away from committing to the pound. Having said that, I don't think that the move lower in the pound is like anything to write home about. So eventually I believe that this is going to provide a buying opportunity, but not yet. What else did we have, Stelio?
Last one, we had some numbers out of the Eurozone. CPI 1.2% year on year, way below the target. And I obviously this was for the month that passed. And,
but it was as expected.
As expected,
actually.
yes.
Yeah, and the unemployment was as expected as well,
exactly.
Around 7.5%, whatever it was.
But with oil crashing $10 or $12, whatever it is, and things developing with the coronavirus, I don't see how inflation is going to be, at least the way they measure it, I don't see how it's going to go up from here. So, Eurozone inflation still remains very low, gives plenty of space for the ECB to stay accommodative and really not worry at all.
Yeah, true. Inflation. I mean, nothing works as somebody would hope. I mean, just imagine that oil becoming cheaper. I mean, what a disaster, right? You have to spend less money fueling your car, less money in transportation. I mean, they should really do something about it.
Yeah.
Crude at $120 would be lovely.
Yeah, it's crazy, right?
Yeah.
No,
yeah, I mean, that keeps me up at night, really.
Your buying power being eroded at only 1.2%. That's really bad. It has to go up 2%.
Horrible. I wish I could do something.
Yeah. So that's it. Pretty much for today. We don't have anything coming up today, and
although the market has one eye open, hoping to hear something from central banks, like some kind of an emergency cut or whatever. I mean, that's what the market is dreaming about, and they might actually get it. And as I said, in one hand, I actually hope they get it, because I have orders higher in the S&P, and I'll have absolutely no problem getting them triggered. I find it very tough for this market to rally above 32 and change, 3200 and change. So it's more than welcome. Okay, thanks, Del. Let's go through some of the questions. One of the first I actually noticed had to do with USD SEC. USD SEC actually got rejected from a very, very nice confluence of resistances. You can see it. If I zoom out, you can see why that was an important confluence of resistances, and we had actually marked last week, the week before, actually, something like that. That was a pivot point here in the market, because we were testing that broken ascending wedges trendline support as resistance. That was also horizontal support resistance area in the 78.6 from the 2019 high to the lows, and beautiful rejection. We sliced through this ascending channel, accelerating lower. Now, admittedly, we're currently testing a support area, so I'm not advocating that you should chase this move, here. But I do think, there is a decent chance that this market can continue lower. I do think that any rebound towards 956 is probably not a bad selling opportunity. Also, we mentioned that yesterday again. Beautiful rejection here from this channel in USD NOK. Stelios actually shorted that retest, and that trade has been working nicely so far, and USD NOK is attempting to hold this previous resistance as support. I'm very skeptical that it's going to manage to do so. I think it should move lower from current levels. So USD NOK looks still as a decent selling opportunity. I mean, the risk reward is still there. In general, during the past couple of days, we've seen commodity currencies, benefiting from a little bit of a rebound. Here is the Aussie. An inside day yesterday, attempting to continue higher today. Here's the Kiwi. So, nothing that invalidates the bear markets yet, no question about it, but definitely some kind of an attempt to stabilize, perhaps even rebound. Now, same deal with the Canadian, although the Canadian does remain weaker, got rejected from that nice confluence of resistances, but this 133, 133.20 area that was acting as resistance is proving tough to break now that is actually working as support. So I wouldn't be an advocate of trying to sell this as long as we trade above it. I actually think that USD CAD, as I said, since a couple of weeks ago, remains one of the best looking USD pairs. So if you want to be long the USD, against the CAD, looks like a decent opportunity. Now, having to do with the metals, we mentioned yesterday that both gold and silver were testing quite important supports, and we are seeing a reaction. I mean, gold back tested this broken symmetrical triangle's resistance and support seem to be rebounding from there. Now, personally, I'm quite hesitant to call this the low. Might as well be, but I wouldn't be surprised if there is another leg lower from here, judging from the momentum of the last move lower. Regardless of what happens, as I've said multiple times, I do not want to try to be short gold for a corrective move lower, because I'd rather be aligned with the larger move, which I think is higher. So if it actually moves lower, I'm going to be buying it, although I already have physical, but I'm not going to have any problem buying it on the financial markets as well. Now, if it doesn't, fine, it can keep on moving higher. Silver definitely remains weaker. Yesterday we got like a very big spinning top, and today so far we have like an inside day to yesterday's range. So between gold and silver, once again, gold seems to be holding up much better. So between the two of them, there's actually no question about it. I mean, if you're bearish these metals for any reason or for any time frame, you should be shorting silver. If on the other hand you're bullish, you should be long gold until silver can start overperforming, because eventually, in a bull market of metals, silver does start to overperform. That's more or less a given. But we're definitely not there yet. Okay, now palladium keeps being under pressure. I like the fact that it's attempting to break 2,500, and I'm obviously still in a position here. And I do think that if we clear 2,500, there is no real support until we get down to 2,250. So another $250 of downside, in my opinion, can happen much faster than anybody expects. So I'm holding on to my position here, and I'm actually going to increase it a little bit more if we close below 2,500 on a daily closing basis. I'm going to add a little bit to it, because I don't want to ruin my cost average, which is very nice. It's at 26.18 actually, so I don't want to bring it a lot lower, but I'm going to be adding a little bit, and then if it moves more, I'm going to be adding a little bit, so on and so forth, because I do believe that this has a lot of room to move lower. I can easily see a full retracement to that breakout area at 2,000 actually. So a lot of people might think that moving from like almost to 2,900 to 2,000 is almost unlikely to happen, but I still consider it a very high probability scenario. We got S&P, that high in 10-year could be a significant high. Yeah. So speaking of which, good mention. So we can go to the bond markets. So yes, we did see a nice stall yesterday, right at the 161.8% extension in the 10-year treasuries. So so far, nice big white candle, a spinning top. If today proves to be like a bearish day here, we might even form an evening star formation, which would point to a deeper pullback. More or less same deal here with the Bund. The Bund formed yesterday actually a shooting star. Today so far we have like a doji, but we still have quite a lot left in the day. So this might also end up being an evening star formation. Now, there is the hammer in the yields, in the 10-year yields. So can this be some type of, a short-term or medium-term low in yields? Yes, it can, but I would definitely need a lot more evidence before I call that a fact, right? So, from a risk-reward perspective, you want to be long yields against yesterday's low. Sure. I mean, from a risk-reward perspective, it makes sense, but keep in mind that this still remains a rather low probability scenario, like a 20-30% chance of that trade working out. Of course, if you have in mind something that has like a 4-to-1 risk-reward ratio, if you believe the chances are 30%, it's worth taking, right? I'm not going to be doing it, but I'm just giving you the facts here.
The RSI would say it has to do some repair work.
Some repair work for sure, but don't forget,
Yeah.
coach, that repair works can also happen by consolidating, horizontally, right?
Yeah, but we could also, have this may be a low, even the low, but I'd say a low because of the RSI reading is what, 20, Steve, down here?
The RSI reading actually went below 18, reached something
Okay.
like 16, 17, something like that.
Okay, well, that would be an exception to the rule for this to be a major bottom. Normally, what you need is a rally and some retesting and marginal new lows.
Yeah, and some divergence. Yeah, and then actually, yes, correct.
I think it'll pay to be patient to look for a bond top here, even though TLT did come off with a nice reversal day yesterday. And if you do want to short interest rate,
here's the 30-year, by the way, which yesterday
the 30-year has a
positive.
bet. Right. So the 30-year, you want to go out because the yield curve
I totally
steepen.
agree.
You don't want to do the 10-year. You want to sell
totally agree.
long-term
If you want to
paper.
be long yields, I think it's a much safer bet to go towards the 30-year. Yeah, 30-year. Yes.
Yep.
Yes, I totally agree with that.
Okay.
Instead of trying to be long yields, like anywhere between 2 to 10 years, I think.
Yeah, the Fed has more leverage on those than 30.
A lot more. Yes, absolutely, absolutely. And even
that's my nugget.
Yeah, even if you believe that we're in the brink of a recession, still we know that the long-term bonds, might stay like rather well bid, especially in the levels we've reached.
I want to just ask you the same question I posed to Blake, Steve, is that, when we were selling off in S&Ps, dollar took a big hit. I mean, it was very directional in Dixie to the downside. And then we had risk on yesterday in the recovery. And what was lacking from the recovery was any bounce in the dollar. So is the message here that even if we have a recovery, what happened in the dollar is real when it can't even rally with risk on. So if we go to 3,200 in the S&Ps, my bet is that all we get is a fib retrace of this decline in the Dixie. So it's a message that the dollar didn't recover yesterday with risk, that the dollar peak is, it gives me more conviction that was the dollar peak. How about you?
I have to remain very cautious with the dollar because it's been doing this thing for quite a long time.
Yeah.
But first of all, my fundamental thesis, and it is that one way or another, the dollar is going to be decimated during this decade. Now, doesn't mean it has to start this month, but I do believe that the path of least resistance, medium to long term for the dollar, is lower, no matter how things work out. Because in both cases, and with the fiscal position that the US is in at the moment, they will have to sacrifice the dollar.
Yeah.
Good case, bad case,
I
they will
just
have to
think,
sacrifice.
you just look at yesterday's daily candle in the dollar and
Now,
yesterday's daily candle in S&Ps.
Yeah, no, I totally agree with what you're saying. Going now to the chart, I can tell you one thing for sure. We have this ascending channel, which has been more or less holding for now. And we have an intact, slow uptrend because we have kept posting higher lows, which means that below 96.30, not only we have broken through this, ascending channel, but we are also now posting a lower low. And that is also going to be a very big technical signal, which I'm pretty sure that a lot of people will be noticing. So then you also have a technical event in hand. So, a move below that level, and my confidence that we might have seen the high in the dollar is going to increase a lot. You know what I mean? So that's what I'm looking for. Corona beer sales are falling indeed. Makes absolutely no sense, and it gives you a basic understanding of what the level of the average person is. I mean, I was seeing that poll they made, and like 38% of people were staying away from Corona beer due to coronavirus, which it is the least to say retarded, but it is what it is. ECB's Holzman does not support stimulus ECB rate cut either, but great point with the average ECB member. Yeah, personally, as long as the Bundesbank is, the main, the main force in the ECB, I don't think from where we are that more stimulus from the ECB is going to be an easy thing to do. They're going to, of course, remain accommodative. There's no question about it. But first of all, I don't think that they believe that going lower or more negative, to be exact in this case, will have any real positive results. So then it remains to be seen if they're willing to increase asset purchases. And I think there's going to be some resistance with that as well. So, I believe that the ECB is not going to be surprising by increasing vastly monetary stimulus at any point in the near future. So I think there is more room from the side of the Fed to do something about it. Well, whatever with whatever that means, for the path of least resistance for the Euro USD, right? The authorities are lying all the time. They think they can get away with it and work against the interest of the majority. Central banks are in the ambit of liars, protectors, short. Yeah, that's exactly how it is. But the only thing I disagree with you is that you're insinuating that they're not getting away with it, but they are actually. I mean, how I can't even begin to describe how many people that are actually educated are buying through the media, all that, that central banks know what they're doing, right? So still, there are a lot of people that haven't realized that they might know what they're doing, but what they're doing is definitely not for the best interest of the average citizen of these countries, right? I mean, the monetary policy we've been going through at least the past 20 years has huge side effects, which are a lot worse than the good they're attempting to do. Checking Expedia, there are really great offers in Milan. Yeah, no question about it. I'm sure there are. Milan is almost empty. There is no one in the streets. Yep. Platinum, silver, and gold. Okay, we already covered silver and gold. Now having to do with platinum. There it is. Nothing much has changed. Oh, wrong chart. There it is. So platinum, here it is. Nothing much has changed. Remains under pressure. Is attempting. It's consolidating right around the 61.8% previous low there, and I have to admit it looks very heavy. So, it looks to me like it wants to continue lower. Hi, Steve, looking to buy the NOK, but hard to commit due to the risk of sentiment. Yeah, I agree with you, Dimitri, but the risk reward is definitely in your favor in the sense that the previous high, which is at the confluence of resistances, is still rather close. So from that perspective, I don't see any wrongdoing with that. Steve, I'm long USD yen, expect impulsive move to 120 as the next level. Let me be very clear about it. I don't see that as a likely scenario as long as we stay below this channel. So in my opinion, might work out, but you are in essence gambling here because we had a breakout from a multi-year trend line resistance. We invalidated that breakout. Usually that's a bearish signal if you get a false bullish breakout. So I would be very careful currently, especially a few minutes ago, you just heard my bias about risk. I think that risk might continue to recover for a few more hours to a few more days, depends. But I'm expecting at least one more leg lower, in which case I doubt it that USD yen will be able to do well. I mean, best case scenario, it can more or less hold still, but it might actually end up plunging lower. So I have to say that personally, I consider this quite a risky trade at the moment. Okay.
I'll be trying it down there around your 78.6 level.
Oh yeah, or
because when you look at it, and it is time for an interview, if you take a long-term look at US dollar yen compared to yields, you can actually say, wow, the yen has really held up well considering what yields have done.
Indeed, it has.
And that's my thesis. So when we get a bond turn, we're going to get a US dollar yen rally. But I think it's early in price and time. Right
yeah,
now.
I think it's very risky, right here, right now. Yeah.
Well, what do I know? I'm just a blind squirrel wearing shades in the middle of a snow-covered forest looking for a nut. Okay.
Okay, coach, whatever you say.
Yeah, I'm a blind squirrel like Rocky and Bullwinkle. Anyway, so we have Sebastian with us, and this is going to be Sebastian's first interview on Phase. Looking forward to meeting him, Steve. Great recap as usual, and I'm going to be watching the S&Ps and seeing how you feel about them if they get up to 32. And you're a pro. I've seen you scale before. You have better emotional. You're much more stable emotionally than I am, because when I shorted 30.85, even though I know it could go to 32. I always beat myself up and go, oh, Dale, why weren't you just patient? You could have been short from 32. So anyway, great recap, Steve. Thank
you, Coach.
Every day a great recap. So
enjoy the interview.
Thank you, buddy. So Sebastian, looking forward to meeting you and hearing about your journey as a trader. And I'm going to get you set up here so we could have a conversation. Waiting for you to come up here. There you are. I'm unmuting you. Hi, Sebastian. Welcome to Face.
Hi, guys. It's a honor to be in here. Indeed, great analysis by Steve.
Yeah, it's he goes through the board every day and keeps people straight in the markets. Really a pleasure to meet you, Seb. And there's a green share button on your screen.
Yeah,
you could share your screen, and then we'll have the pictures. Beautiful.
Can you see my screen?
It's coming up. Look at that. Yeah, I see the. All right, so yeah, seems like you are a little skeptical about central bankers too. So why don't you tell us? Yeah. So Seb. You're a fairly young guy, right? You're under 30?
Yeah, I'm turning 27 on June, actually.
Okay, so that's long enough to have your nose bloodied a few times. Tell us what you were doing
what day
before
in June?
26.
Ah, okay. I'm 12. Okay.
All right, well,
12
you're checking out
weeks.
his astrological sign, Steve. This is not Match.com here.
No,
All
I
right,
don't
so
believe in that.
all right, anyway. Anyway, so Seb, what were you doing before you got involved in trading? What led you into it? And tell us a little bit about your pre-market history.
So I've been training since 2 years, but I've been interested in financial markets and macroeconomy since more than 5 years.
Okay,
So
all right.
yeah, I started to be interested in that during my bachelor in economic analysis.
Okay,
So yeah, I was apart from my studies, I was reading a lot of blogs and books. I was actually inspired by one of the most famous blogs in Poland because I'm come from Poland.
okay. Nostrovia.
Nastrowie, thank you.
All right, so who was the guy in Poland that influenced you? I'm curious.
So his nickname is Trader21, and the website is called Independent Traders. So they conduct some macro analysis as well as analysis about different asset classes, including companies. So they also conduct some. They manage some portfolios, and they also have their own portfolio,
Okay.
like since more than 10 years, or maybe even more.
Did you gravitate more towards the fundamental analysis and teach yourself technicals, or we'll know after the cartoon, but why don't you tell us if you think the guardians of the economy can really save us, or they're merely going to turn out to be cartoon figures?
So the graphic shows guardians of the economy, but nowadays it's actually more like guardians of the stock markets, I would say.
Okay, I agree.
Yeah, because every move, every statement, every kind of jawboning by the central bankers influence the stock market and related assets, as you've speak about that during
Yeah.
this session.
Okay. So in that kind of environment, do you have any kind of narrative that you're following as far as where to go to both protect yourself in this environment and where to capitalize on the events that lie ahead for us?
So in responding to that question, I would like to show you this graph.
And by the way, whoever drew that cartoon sure made Lagarde look pretty hot for a senior citizen. Go ahead.
Yeah, indeed.
All right, so money's the
Founded on, but I think Jim Bianco from
Oh,
Bianco
okay.
Research posted on Twitter.
Okay. All right.
Okay.
So interesting. The correlation between money supply and the S&Ps, is that
Yeah,
a
so
big part of
last
your
10
work?
years, yeah, last 10 years have been pretty easy. Actually, the global money supply is here for 12 largest economies. So
Uh-huh.
it's been a coordinated like action by the biggest central banks, improving their balance sheets, cutting rates or keeping rates so low for the last decade. And as we know, the European Central Bank, Swiss National Bank, and Bank of Japan went even further. They went below zero. So actually, I believe it boosted the stock markets around the world
Mhm.
until something broke last week, as we can see on the bottom chart. So the correlation has broken. So S&P 500, as we know, has recorded one of the fastest, I think the fastest 10% correction in the history.
Yeah.
And in terms of this, I would like to show the Monday session, so the yesterday session.
Okay.
You mentioned that the volatility on the markets is back, and this chart shows the open Monday open. So we had a gap down over the weekend more than 3%, actually 3.5%, and then we went up more than 4%, actually 4.5% overnight. In Australia and Pacific session, and then when the Europe came, they dropped the S&P futures to almost 4%. And before the United States came, so the biggest volumes, the S&P futures went up by almost 3%. And so you've had actually 4 big moves before the biggest volumes came to the market in only one day. Before that, as I noted on the chart, we've had 70 straight day trading sessions with a move less than 1% at close for the S&P 500. It was before January 28th. So those type of moves are really unusual, and it's like sort of like a little warning for traders that if you use high leverage, you could be wiped out. Your account could be wiped out like a couple of times during one day.
Yeah, so the character of the market has changed with the VIX trading in the 13 range to a lot of people weren't looking for mid 30s. In fact, I was looking for higher VIX. I wasn't sure how high. So now that the character of the market has changed and you're talking about all these intraday swings, do you believe that day trading is a better way to handle it, or just continue to position trade with lower leverage?
Actually, I used both, but nowadays I'm trading on using daily candles. So first I'm doing an overview, macroeconomic overview, what is going on the markets, what the central bankers think, what they're gonna do, also from the fiscal perspective, and even the things like the recent polls of the U.S. Preliminary elections, which can affect the markets around the world. I've learned that actually during my master course, when we've had sort of like a trading bootcamp with Amplified Trading, is a company based in London in the UK, which teaches young traders who later on goes to the biggest financial institutions in the world, like Morgan Stanley, Goldman, etc. So I think that the guys know what they are doing, and I'm actually watching their trading briefings almost every day, because they combine macro view with the simple technical analysis. Okay. So I learned that from them, and I'm applying that to my training. So I'm holding positions over a few days or over couple of weeks, but the last trade I made, I actually traded the bounce on the S&P 500. So I held only that position. I held only over the one session, because the move was actually huge. The Dow Jones actually has jumped like more than 5%. So,
okay. All right. And what gave you a buy signal? What you know, you may have had a view, but you said you trade daily candles. What daily candle told you to get long for yesterday's reaction?
So over the weekend, I checked the news and news flows, and I seen the statement from the Jerome Powell. It's actually the statement came on Friday, 2 hours before the session. It's this one. Okay. So usually central banks they never go for an emergency cut or for a new asset purchases program. They first try to use the forward guidance or the so-called jeboning. So that was the first move from the Federal Reserve and the statement by Jerome Powell. And then on Monday, Bank of Japan came. And actually before the session, there were rumors that Bank of Japan gonna buy a huge amount of exchange traded funds. So I think everyone is they are trading like stocks.
But you don't select your entries based upon a news article. There's got to be something that is a trigger for you.
Yeah,
you just read a news article and say, "Well, that's bullish. I'll buy it anywhere."
And then I looked at the chart of the S&P 500.
Okay.
And I seen that it's like hugely oversold, but of course it's been oversold since 2 or 3 trading day sessions. But actually, the S&P 500 touched the level and not seen since October 2019. So that was a bounce from that level. So I saw this area between 2,900 and the lowest the levels not seen since October 2019 as a point of entry. So I went long and I put my stop loss below that level, like not exactly to the tick, but like 10 or 15 points below that level, just to keep my risk reward, in a sort of sensible.
Did you have a target? You told us about your stop. Did you have a target for that trade of where you would come out of it? Are you still long? Do you take partial profits? Do you trail stops?
No, I'm not using trading stops. I'm using only stop loss, and I'm closing position mostly. Like if it's profitable, I'm using closing position using hand. So I never have a target because it depends what's gonna happen, like in the news flow.
Mm-hmm.
So I'm usually like roughly can estimate the risk reward of the trade, but I never done that. Like I've never materialized that to the tick.
Okay, so you're flat now. You're flat now, right? You took profits on your long.
Yeah, and I'm staying like on the side for now. I'm watching what's going on the market, and I'm looking.
Nothing wrong with that.
Yeah, I'm looking for being engaged again in gold. So I'm probably looking what's going on in the market. We'll be looking for some long position in gold, and I'm usually divide my positions by 2. The one is double larger than the previous one, because I don't have like much capital to separate using a few or more positions. So now I'm trying to learn how to navigate in this market.
Okay.
So that's my approach, which actually from month to month it's developing.
Okay. Anything else you brought for us to discuss?
I wanted to point out about one thing when we also experienced this volatility. This chart from Bloomberg comes like from 2018. It shows that more than half of fund managers have never experienced a bear market.
Yeah.
So that may be another reason of the last huge volatility and huge moves, because most of them maybe they never seen the things like we've seen over the last week, and most of them basically panic. That's why we also partially seen the gold drop. The gold drop by 4%, right, on Friday, or 5%.
Yeah.
because
Why do you prefer gold over silver?
Yes, I do.
Why?
Silver is more bullish in a period when the economy recovers, not when economy is after a very long expansion and is a higher probability that in a year or 2 or 3 years it's gonna fall into recession, because silver is more industrial metal. Gold is more regarded as a safe haven. So
Okay.
if you look at the previous bear market and the previous recession in the United States, gold behaved well during the bear market after 30% drop first and then started to recover, because it's been a liquidity crisis, so people were selling gold to actually have some cash and liquidity, and then gold started to increase. The silver actually, I think you saw the gold to silver ratio on the last webinar, that the gold to silver ratio spiked during the bear market, but when the bear market ended and the economy started to recover, silver has started its rally,
Right.
because
Okay.
it's a supply and demand.
Got it. Any view on the dollar?
I'm actually in the opposite what actually Steve said. So I see the dollar over the next 10 years to gradually increase. It's not gonna be like exponential increase, or it's gonna be choppy, but over the next 10 years it's going to increase simply because of demographics. And because of that, technology and resilience of the economy in the United States will be much better than in Europe, than in China, than in Japan. So it will lead to higher interest rates and a better economy on a relative basis to the countries I just mentioned.
Okay, so euro, where could would the euro was 107.5 a few weeks ago. Do you see the euro, first of all, continuing holding together, and subpar euro, is that in your longer range view?
So what we've seen, you saw the chart, you showed us the chart that the euro dollar just came up to the long term declining trend.
Okay.
And I think the trend will continue. Like, for me, the eurozone economy is broken, and it's not far away from the collapse of the European banking system. It all depends what will happen in China over the next year, over the next 2 years. And if China will have some troubles, it will
That'll be the final straw. Okay, so if China catches a cold, Europe gets pneumonia, or should I say corona?
Sort of like that.
Okay, so sounds to me like you believe there is potential for a major crisis in China. What would be the catalyst for it? All the debt, ghost cities, the yuan. What are you worried about when it comes to China?
It's a toward. So we came to the point where in China you have to produce 1 unit of GDP growth. You have to issue 7 units of debt.
Okay,
it's a lot, and the debt, like, people say that the amount of debt doesn't matter if if it's possible to manage that debt and to roll over, but the total debt to GDP in China have breached 300% of GDP, and it's excluding shadow banking system, which Chinese authorities stopped to report data about in 2018. So we don't know really what's going on there in the shadow banking system.
Okay.
But I'm not really like positive about the levels of debt, and it's simply law of diminishing returns.
Okay. All right. So with all of this debt to GDP, and China's not alone, and the U.S. is what, 150 to 200%? How does the debt get resolved? I guess the big question is, and you're kind of constructive the dollar, do central banks inflate their way out of a debt crisis, which could lead to hyperinflation, or do they default on their debt, which leads to a deflationary depression?
In terms of hyperinflation, I think that scenario could happen only when the MMT will be introduced, like full MMT, opted by the socialist parties in the US. Otherwise, I don't see significant inflation in the United States in the upcoming years. Like in this year, actually, I see inflation to drop, and when we look at inflation, we actually should look at inflation expectations, and these ones gradually dropped again. In the Eurozone, those have been falling over the last few years, but in the US, over the next 12 months, I see more deflationary pressures than inflationary pressures, and the central bank's actions not going to help, in my opinion.
All right, Sebastian. So if people want to follow you, I went to your blog. You could show your blog if you'd like, so people could follow you and keep in touch with the things that you're seeing. I will say this, that you definitely have a very good feel for, I asked you a broad base of questions. You were able to give me some interesting answers for having, really only been in a market watcher for 5 years. So you have a bright future ahead of you as a market commentator, Sebastian. I wish you a lot of success. And do you want to show your blog so people could take a look at it? And you know what happens after people are interviewed with me, Sebastian? Any idea?
I think, no, I'm not going to guess.
Okay, you become my trading warrior brother.
All right.
All right, so you like it or not, Sebastian, my trading warrior brother? I do. Okay, you've walked on fire being interviewed with me, so I really appreciate you having, wanting to share your ideas with people and giving them some sound ideas to consider, and wish you a lot of success, and let's keep in touch.
Thank you so much for inviting me. I would like you to ask whether you can conclude this interview with your coronavirus song. It's astonishing. It's brilliant.
Oh, you mean Corona, Corona?
Yes.
Fear that I'll own ya. Born in a lab in China, spreading so I'll find ya. No one is safe, not even a king, and I'll be the excuse for everything.
Beautiful. Thank you so much.
And Sebastian, this is really how I end our webinars. Remember, everybody, don't just count your pips, count your blessings. And we'll see everyone tomorrow. Safe trading, reduce your leverage, reduce your time frames, and it's okay to do nothing. The markets will be here when you're ready. So thanks again, Sebastian, and everyone out there. Have a great trading day. See you in members chat, and adios. We'll see you
Thank you so
tomorrow.
much.
All right. Thank you, Seb. Adios. You're
Adios.
welcome,
Bye bye.
Monica. Bye-bye.